Good evening. This is Brian Shannon from Alpha Trends Blogspot. It's August 1st, and let's go ahead and get started by taking a look at some stock ideas for tomorrow. I've got the Nasdaq 100 up on the screen right now, and obviously we remain in a bear market. So the market's trying to find a bottom in here, but it's not very convincing at all. I kind of went through that a little bit earlier. So let's get right to the stocks. Before I really get into those stocks, though, what I want to say is that the ideas that I put on this website are ideas. That's it. It's up to you to decide whether or not you want to trade them. And when you take the initiative to put that trade on, no matter where you got the idea or what I suggested as far as a stop or an entry goes, it becomes your trade. Today I got an email from someone that kind of annoyed me that said, "Hey Brian, how could you have been so wrong about Hansen?" And the bottom line is on Hansen, I still think the stock's going lower. I got stopped out with a small. Actually, I showed the trade I had yesterday. I made a little bit of money with it, but you have to learn to accept responsibility for your trades. Looking at a company like Hansen that's clearly in a longer-term uptrend, it's a much higher risk stock, and you have to recognize that it's a volatile stock as well. And no one is right all the time. I'm definitely not going to be right all the time. So don't take my advice as to where to get in or to get out and treat that as that's the best advice out there. You have to learn to accept responsibility for all your actions. And in the market, you have to come up with your own plan. My ideas are just that. They're just ideas to help kind of guide you. Hopefully you're getting a little bit of education here as well. Don't mean to go on. Let's go ahead and take a look at a couple stocks. First of all, on the long side, we're going to look at Avici Systems, symbol AVCI. And I believe this company probably reported earnings about 2 weeks ago. They caused this big gap higher. It closed lower that day, but then it rallied back up again with some volume in here and has been holding near these prior highs just under the $9 level. Now, when we look at a weekly time frame of AVCI, we can see that it's got this level of prior resistance in here, but it was only short-term resistance. I think this stock can get going higher again and probably up close to $10.5 a share. So here's how I would suggest to play the stock, and whether you trade it or not is up to you. Again, I don't want to repeat myself over and over on that again, but I got annoyed by one email, so let's just leave it at that. If the stock trades above $8.80, that's where you want to buy it, or that's where I would suggest buying it. I would also suggest protecting yourself from a large loss by placing a stop order under these lows right here. These lows are 866, so let's put a stop at 864. Whether you decide to take this trade or not is up to you. MDCO, let's take a look at that one again. Medicines Company. The stock didn't trade up past that 2102 level, so we'll look at it again because on the daily time frame, it's one of the most bullish looking stocks there is out there in my opinion. And looking at this daily time frame, it's just consolidating on light volume and a nice little bullish flag in here. So if it gets above 2102, that's where we want to buy the stock. And I think you can put your stop under this low here at $20.68. So let's say $20.66. So we would be risking about 37 cents on MDCO. I still think that it's a clear shot to 22 and then possibly 23.5 based on that longer term chart. Take a look at the video from 2 days ago to come up with that time frame or that target rather. Finally, we're going to look on the last one on long side. I have no idea how to pronounce it. I'll just go by its title, which is, by its symbol rather, which is XING. It's some kind of telephone company based out of China, I believe. Here, let's look at the weekly time frame. Very bullish. We had some big volume event back here, and looking at a monthly time frame, we can see that if we change the scaling in here, I think we can see probably a retest of these, 13.5 level or so. And here the stock is at 10.5. Now maybe that's a little bit too aggressive because we've got to still deal with this gap up here near $12 a share. So let's say our target is about $12 a share, even though the longer term suggests that it could potentially move higher. What I want to see here is a move past this high, which is $10.56. Above $10.56, I would buy this stock. I'll put my stop, worst case scenario, right under this level here at about $10.38. And again, looking for a move up towards about $12 a share. On the short side, here's a very speculative play. And I bring this to you because a lot of the stocks that I've mentioned recently, Whole Foods Market, Check Free, they've come out with earnings and then just gotten absolutely destroyed. Now here's another high flyer. This is Dynamic Materials, symbol BOOM, BOOM. And they've had a great history as far as earnings go, but the stock is starting to show signs of breaking down. In fact, it looks like a big head and shoulders top that if this stock misses earnings, and I believe they report earnings tomorrow night, if the stock misses their earnings estimate, I think the stock can gap down very significantly here, maybe below, down towards 23 or so. And it seems like a far-fetched play, but that's kind of been the trend here with these high flyers that seem to miss their earnings estimates. I would definitely not, this is a bet here, okay? So I would definitely not go into the stock as a short sale. Instead, I would suggest maybe buying some puts. Now, the way you have to look at these puts are that you have to be able to be willing to risk the entire amount. Now, the August 30 puts, I bought a couple of them today at $1.65 or maybe $1.70, I think it was. And if the stock goes higher, I'm almost guaranteed, I think, to lose the entire amount. So you have to look at that and say, at $170 a contract, if the stock doesn't surprise to the downside or have a negative reaction to earnings, how much are you willing to lose? And that's going to be up to you. That's the play here for Dynamic Materials. It's very speculative. It's a bet in front of earnings. But the trend has been there for a lot of these high flyers, and certainly the technical condition, the way it's holding below this 200-day moving average looks, and the 50-day moving average, it looks like the stock could get hit hard. And next up, we'll take a look at F5 Networks, FFIV, looking at a daily time frame. The stock, this was a real move up here, and then it got hit hard. It got hit again. Now it's consolidated on light volume in there. And now looking at a 10-minute time frame, and we'll even shrink it down to a 5-minute time frame, the way I would want to get involved with this is to sell it short underneath these lows. These lows are 44.70. So below 44.70, I think you want to risk no more than about 35 cents a share. And I think the stock can make a drop back down towards about that 41, 42 level. So should be a nice risk reward if this play occurs. It's up to you, again, whether you're comfortable with the amount of risk that might be in there. Yahoo we'll look at next. Yahoo, I've made my opinion clear that it looks like this stock has made a large top in here. On the monthly time frame, it's broken down. I think it can continue to go lower, similar to the way that eBay has been just getting destroyed in here, just day after day, week after week. eBay continues to get hit. But looking at Yahoo, again, on a weekly time frame here, now a daily time frame, it rallied up towards about that $27 level, which I initially thought it might do after it gapped lower. Now, on the 10-minute time frame, it's showing signs that it's getting ready to break down again. And it's been holding above that 5-day moving average. Now, today it couldn't get back above that 5-day moving average. It looks like it's acting as resistance. I want to sell this one short on weakness as well. I want to sell it short below $26.74. I would put my stop probably up about $26.95. So about 25-30 cents risk. And I think you're going to see probably at least a retest of these lows down near the $25 level for Yahoo, symbol YHOO. Last one we'll look at is International Rectifier, symbol IRF. Clearly, this stock's in a downtrend and continues to act weak. Looks like on the weekly time frame that maybe we're going to get another push lower down towards these lows. So looking at a 10-minute time frame, here's another stock. I only want to sell short on weakness, and we'll take it on a short on weakness below this low of $34.60. Below $34.60, I want to sell this stock short. I would put my stop about $34.95, risking about 35 cents. And on the downside, as far as a target goes, I think we could probably look for maybe this level right here, which is about $33 a share. So again, a nice risk reward. And I don't want to belabor the point, but make these ideas your own. I don't have all the answers here by any means. I'm one person looking at the market, and I try to bring to you low risk ideas. I always suggest a stop. You got to be expecting that you're going to take losses from time to time. Don't look at anyone to make your decisions for you. Make these ideas your own. Decide whether you want to trade them. Decide whether or not you should even be involved in the market if you can't handle taking a loss from time to time. Thanks again for visiting my blog here at Alpha Trends, and I will talk to you tomorrow.